Good morning. It's Thursday, July 3rd. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So I want to wish everyone a happy and safe 4th of July. I remember as a kid making my own fireworks. Man, that risk to reward ratio was a little bit off then. So luckily I got all my fingers, toes, and eyesights here. So looking at the silver market, and I really want to see this breakout so I can rock this thing all weekend. Here, this Make Silver Great Again hat. And, see if this market could really break out to the upside. We poke through the top of that bull flag, and I've got the daily chart with that flag there. And if you get the chart pack, you'll be able to see that. And I'm updating that every day and sending it out to you guys. So if you haven't gotten the chart pack, register in the link in the description below. We'll get that out to you here because there's not only the silver market, but there's a lot of great markets out there. You had Bitcoin break out to the upside. Many of the clients that are working closely with me have been adding Bitcoin in that kind of sub 106,000 down to about 98,000. And as you get closer to the resistance points, this 110, 111 and all-time highs here, you let some of those futures go, you harvest some of the gains on there, and then you want to kind of re-own it with some call spread. So that's something we've been doing here because a lot of times when you're playing these trading ranges, the market tends to disappoint. And that's what I outlined. If you didn't watch yesterday's video, just kind of skip ahead when you see me with the pad of paper out. I kind of outline that chart, what's going on, and some of the candlestick patterns that we're seeing on there. So we'll see if it leaves us with another topping tail. That's where the market goes up, has this big wick, and then we close lower on the day and we start to have some kind of body that's filling here. And if some of the traders come in and they start harvesting some of the gains from the recent run up we've had in the silver market, or are we going to break out to the upside? Do I finally get to go to the pawn shop, start unloading these things? Paid $150. We're at about $370 or so. We'll see here. I need a new phone. So the cell phone that I'm using for this Metals Minute's shattered at the screen, so it's kind of funny. But so stock futures, they will close at 12:15 Central Time. Tomorrow we're going to see the metals, the energies, the equities. They are going to be open, but they're going to close early, right around 12:15 Central Time. So if you need a copy of the holiday schedule, send an email to info@bluelinefutures.com. We'll give you the rundown on what markets are trading here, and it's also the benefit of having a futures account over the equity account, trading the miners, trading the ETFs, things like that. They are all going to be completely closed for the day. So if you need that action in the markets, you're going to have that with the futures markets. So looking at stock futures, they are slightly unchanged to a little bit higher here in the morning. And I think that the market is kind of edging towards a little bit of an optimistic number coming out here later today. So we are seeing the jobs report. That'll be released around 7:30 a.m. Central Time. We've seen some decreased volatility in the option pricing is suggesting some type of complacency ahead of the data and also the upcoming tariff deadline. Now, I'll be looking at inexpensive S&P 500 broken put butterfly. Sounds very complicated, but it's not really complicated at all. Basically, what I'm looking at doing is putting out a small outlay of cash here in the event that when we come back from the holiday break, or if the number starts to disappoint, we could see a flush out in the U.S. equity markets. So I'll want to have that put protection in place. Not a recommendation to the public, but just something that I want to be transparent about as far as what I'm going to be looking at doing. And why would I buy put options on the S&P 500? Well, why do you have car insurance? Why do you have health insurance? You don't crash your car every day and you don't end up in the hospital every day, but you sure have that premium that comes along here. So that's what I look at in the U.S. equity markets. And I think to myself that we are trading near an all-time high, and we do have a little bit of risk coming, and the market is very complacent at the moment here. So it makes sense to me. In my own personal opinion, now you reflect on what you need to do with your own personal trading account. So the stock futures, again, they are just a little bit unchanged here on the day. So the market will close at noon, and the payrolls are the key event for the day. Once that payroll number comes out, I expect to see a little bit of volatility here. It'll probably die off around the 8:30 open. You'll get one more surge here from the cash retail guys trading, and then it will most likely die off once Europe closes around 10:30 Central Time, and then all the traders and the big shots will be headed to the Hamptons. I will be heading to the beach on the Gulf of America. So looking at the economic data coming out, we do have that non-farm payroll number. Estimates are for 106,000 jobs created. We had a big miss on the ADP. It was a negative number, down 33,000. So the prior number on the non-farm payroll was 139,000, and the markets are pricing in 115,000. If the print comes in line, so we come into that 106 to 115, the markets give that about a 40% chance that they come in at 105,000 or better. we will probably see another all-time high in the S&P 500. The S&P 500, excuse me, should be pricing in about a 50 basis point to 1% gain if we get that kind of scenario. Now we're also going to watch the private payrolls. The estimates for 100,000. The prior was 140,000. We'll also want to watch the manufacturing, where the estimates are a small slowdown of negative 2,000 versus the prior of negative 8,000. So is this number getting closer to where we're expanding? Are we continuing to contract? And I'll be watching the copper market with regards to that. The June unemployment rate is estimated to be 4.3% versus the prior 4.2%. So I'll be watching gold, and I'll also be watching interest rates when that particular data point comes across. So if you are a death to America in stock market type person, well, you want to see a reading less than 85,000, which could lead to about a 2 to 3% drop in the S&P 500. And the reason why that is such a big sell-off here is, one, we're at all-time highs. People would book some of their gains here in the markets, and then also because of the thinly traded market and the less volume that's coming into the market, you could see that quick plunge here. But I would anticipate any kind of major sell-off like that to occur would be met with the dip buyers, and they would come back in the market, because this would strengthen the case for a July interest rate cut and also put that pressure on Fed Chairman Jerome Powell. I'll also be watching Donald Trump in any kind of Truth Social tweet that he has with regards to the number, especially if it comes in line with expectations, for him to really put the screws on that Fed Chairman Jerome Powell. So we'll have Fed's Raphael Bostic. He will give a speech on monetary policy due out at 10 a.m. And then if you look at the exchange-traded funds, they did continue to add to the gold market, about 46,000 troy ounces of gold holdings in a previous trading session. And then the ETFs, they added about 1.6 million troy ounces of silver holdings in the previous session. And what that's doing here is, you saw a big move up in the silver market yesterday. Now we're seeing the continuation. We're up right near that resistance point. And you look at the year-to-date percentage change, silver up 8%. So that's the largest we've seen it all year long. I'd have to go back and look at the numbers, but just working off of memory. And then the gold market up 9.2%. So that's another big move higher here. And people are playing that stagflation play when it comes to the gold market. Realistically, we got to clear about 33. It got up to 33.75. The high of the overnight session, 33.7690. We get up over that level, then we're probably going to attack that 34.05 to 10 mark, and that'll be the next big resistance point on the gold market. Silver, I said that if we could break out of this bull flag, we could probably target that $38, which is not that far away, and we get above there, most likely 40, which is the top of a trend line. And again, that's in the chart pack. Make sure you register for that, because that's kind of a no-nonsense. You just get about 7 to 10 charts that come out. All the lines, no technical indicators on there whatsoever. Just key levels, old school, pull out the ruler, pull out the pencil, and draw your trend lines here, and that's what I'm kind of looking at as well. So the gold-silver ratio drops to 90 to 1, and we'll want to keep an eye on that platinum market, which is unchanged to slightly lower, and the reason is that I believe that platinum has really helped fuel some of the rally in the silver market, so we really don't want to see that platinum crater like $100, $150 in a day. That would be slightly problematic for some of these industrial metals, just saying here, because it would be a gauge of the Chinese economy and their demand. But we'll see what happens here. A lot of activity, a lot of craziness. Hope, again, you guys have a happy and safe 4th of July. I'll be at the desk until about like 10:30. I'll be cutting out. If you guys need to place any orders, you can always reach out to me or the trade desk. You should also have online access as well. I'll be back at the desk tomorrow in the morning, and then probably working through most of the session tomorrow, catching up on some paperwork, things like that. So you guys got any questions, you want to open up an account, shoot an email, info@bluelinefutures.com. And remember that futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck. Go get them.